Today we are going deeper into the engine room of AI, semiconductors, specifically the memory chips that feed data to every GPU running AI workloads, and one company now accessible to US investors for the first time. Edward, set the stage. What exactly are these chips doing, and why are they so indispensable?
Think of semiconductors as integrated circuits containing billions of microscopic transistors acting as ultra-fast switches. In AI, performance comes down to computational scale and memory speed. Without advanced memory chips, training large language models or running real-time AI inference would be mathematically impossible. The memory feeding the GPU is just as critical as the GPU itself.
That brings us to SK Hynix, now listed on Nasdaq under the ticker SKHY. Their $26.5 billion ADR offering in July 2026 actually eclipsed Alibaba's historic 2014 record. Walk us through the financial performance.
The numbers are staggering, James. Q2 2026 revenue jumped 257% year-over-year to KRW 79.3 trillion, roughly $58 billion USD. Operating income surged to KRW 60.5 trillion, driving a record 76% operating margin. And despite that explosive growth, the stock trades at a forward PE of around 8, significantly discounted compared to most US semiconductor peers.
A 76% operating margin in hardware is extraordinary. Where do they stand competitively?
They dominate where it matters most for AI. SK Hynix commands a 56.4% global market share in high-bandwidth memory, the specialized ultra-fast memory stacked alongside GPUs to feed data to AI processors. They have already initiated mass production on their next-generation HBM4 product line in the second half of 2026, keeping them ahead of Samsung and Micron.
So they hold the dominant share of the most critical memory bottleneck in AI. What does the long-term bull case look like?
Capacity expansion and technological moats. SK Hynix is investing $390 billion into their Yongin megacluster in South Korea for next-generation memory production. They also have a new $4 billion advanced packaging facility in Indiana, positioning them directly inside the US tech supply chain, improving yields and logistics for key American clients like NVIDIA. Institutions view HBM not as a commodity, but as a customized high-margin system solution co-designed with AI chipmaker architectures. That structural demand is very different from past memory cycles.
Let us keep things balanced. What are the key risks?
3 main ones. First, cyclicality. Memory markets are historically volatile. If hyperscalers pause AI spending or digest current inventory, pricing power could cool quickly. Second, geopolitical pressure. Emerging Chinese memory players like YMTC are competing in standard memory segments, which could pressure margins over time. Third, pricing durability. Maintaining a 76% operating margin over multiple years is extremely difficult if competitors scale up high-density chip production. The stock has already pulled back from its $170 debut to around $143, which reflects some of these concerns being priced in.
What are institutional investors seeing that retail investors are missing?
Retail investors often treat memory as a generic commodity subject to wild price swings. Institutions recognize that HBM is fundamentally different. It is a co-engineered, high-margin product tied directly to AI accelerator roadmaps. The secular demand from AI compute creates structural long-term growth rather than a short-lived cycle. Analyst consensus targets are approximately 20% above current levels.
What about the broader macro environment?
Interest rate expectations remain key. Higher rates compress multiples on technology equities broadly. Currency fluctuations between the US dollar and Korean won also directly affect earnings conversions for international investors. And ongoing trade policy shifts keep supply chain resilience front of mind for any Korean semiconductor company.
Now, the CF Global stock score for SK Hynix.
Based on our internal analysis framework, educational only, not a stock recommendation. Revenue growth, 10 out of 10. 257% year-over-year is exceptional by any measure. Balance sheet, 8 out of 10. Strong but heavy capital expenditure commitments. Moat, 9 out of 10. 56% HBM market share, and leading HBM4 technology is a genuine technological moat. Valuation, 9 out of 10. Forward PE of 8 is genuinely compelling relative to growth. Risk, 6 out of 10. Memory cyclicality and Chinese competition are real risks to watch. Total CF Global Stock Score for SK Hynix, 42 out of 50. Overall status, strong position.
42 out of 50, the highest score we have given any stock in this series. Next episode, we continue the memory deep dive. Do not miss it.
And amid all this, do not forget the most important investment of all, enjoying the beauty of life.
Before we close, we want to hear from you. Drop a comment below with the stocks you would like us to analyze next. If enough of you request the same name, we will cover it in a future episode. Know AI, invest in AI. See you next episode.